Well, I mean, it's a combination of many things. I think ultimately it's just reflecting the currency debasement that we've had uh, almost 25 years. I always remember the speech Ben Bernanke gave back in 2002, November 2002. It was the helicopter speech. At the time, he wasn't the chairman of the Federal Reserve, but he was being groomed to take over Alan Greenspan, and he said we're never going to allow deflation to happen again because we've got this technology called the printing press where we can just create dollars at no cost. And that Elijah, was what really woke me up to the fact that I needed to have silver and gold and silver, and keep adding on to it, and nothing's changed. The only thing that's happening now is that I think the world is waking up to it, especially sovereign nations and their central banks, and they've been buying real physical gold for the last 3-4 years, and it looks like even the United States might be repatriating all the gold that it's probably leased through the bullion banks. I mean, yesterday I think President Trump made a comment on Truth Social. He said that when you're negotiating, if you have gold, you can call the shots. So that's what I'm assuming. But does he know, though, that China probably has a lot more gold in the U.S., and that's if the U.S. has those 8,130 tons, and that's why think the price is going higher. Some would call it, of course, the dollar going lower, and it's not just a dollar problem. It's a British pound problem, a euro problem. It's a problem for all fiat currencies, and I spoke about this in my video today. You can't let the dollar index distract you, because ultimately all fiat currencies are going to sink to the bottom versus gold. So that's what I think is happening. I guess silver still has to catch up. It's quite frustrating that we're seeing silver not really go up a lot quicker, but I think we just need to have patience. Dow-Gold ratio, I think, yes, it could go to at least 1-to-1. If you look back at the early 30s and then 1980, we had the Dow-Gold ratio go down to 2, roughly, in 1932 or 33. And then in 1980, it went 1-to-1. Gold was 850. The Dow was at 850. So we could even have that ratio going like less than 1, which would mean, for example, you could buy one Dow with half an ounce of gold. And yes, we reached like over 40 in late 1999, and it's never retouched or retouched that level. And recently, I noticed that it's broken down, and today especially, I think the handle is 11. For the last 5-6 years, it had been trading around 20. So I'm not saying it's going to go straight to 1 in the next few weeks or months. I think it will take a little longer, maybe a year or two. But it's definitely broken down, and it proves that we're probably not really going to have what we saw. I think we already had the correction in gold. I think the event you talked about when the Dow, NASDAQ, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. The Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents. I mean, it was up a lot more earlier, but yeah, so Yeah, that's the way I see it. The Dow-Gold ratio, that's an important one as well. And it's not only me who sees that. It's like people like Pierre Lassonde. He thinks is going back to 1-to-1. Yeah, I guess it depends, like where you are and how the let's say the precious metals retail market is where you live. But I do expect pullbacks. Markets never go up in a straight line. But I think gold and silver and commodities in general, they're going to become more like the stock market has been for the last, 40 years. People always buy the dip. It's going to be the same thing for gold, silver, the miners. And yes, if you have the chance to add on to gold and silver, if we see a pullback, you should add on, but beware that they're going to be quick and sharp, these pullbacks, and your dealer might not even have a very good price. He might even have, or she might have a premium for you to pay. I mean, trading is different, of course, because some people leverage trading. I don't really recommend trading gold and silver, because I think what it's reflecting is the system breaking down, the currency system breaking down, and the emotion that we have for gold right now might be a bit greed, but I think when fear kicks in as well, when people realize that their fiat currencies, be it the dollar, the pound, the euro, the Australian dollar, or whatever, when they realize that these currencies are becoming worth less and less, they're going to try to jump into gold. And I think right now it's still the wholesale market that's jumping into gold. Central banks and sovereign nations and big money is jumping into gold. I think the smart money. Yeah, I think the only way the gold bull market could be reversed would be for central banks to act together and say one day all the central banks start raising rates aggressively, stop QE, and also governments getting together and saying we're not going to spend anymore, no deficit spending. But I can't see that happening. We saw the ECB cut rates last week. We're seeing President Trump criticizing the chairman of the Federal Reserve, calling him too late Jerome or whatever, that he needs to cut rates. We're seeing the markets discount several rate cuts already. So yeah, I don't see any end in sight, and eventually I think the public and investors are going to wake up and realize that there's no end to the inflation, and that's what Ludwig von Mises called the moment where the crack-up boom, or the flight to hard assets or hyperinflation. That's when it starts, and when it starts, if you're not protected, if you haven't protected your assets with or your wealth with hard assets like gold, silver, it will be too late. So that's why I don't think it pays to be too cute wait for pullbacks right now in gold and silver. I would just say, if you're fortunate enough to have spare fiat currency savings, and you're looking to buy gold and silver, do it. And I wouldn't sell my gold to buy silver. I would just buy both. Maybe if you favor silver, buy a bit more silver. Yeah, I guess in the short term it does help gold go up versus the dollar. But if you look at the price of gold in euros and pounds and yen, that's still really high as well, and it's made a new all-time high versus the pound today. And if you look at the dollar index historically, it was an index created in 1973 to measure the dollar versus the major Western currencies, because up until 1973, Elijah, all currencies were had a fixed rate versus the dollar, and the dollar was fixed versus gold. But yeah, it started out at 100 in 1973, and we're around 98 right now. So it's lost 2% in 52 years. While gold, I think, was 85 when the dollar index started trading. So I think, yes, in the short term, it does impact gold. But I think overall, I think it's a huge distraction because it's measuring fiat currencies against each other. And we know, Elijah, that they all end up going to zero. And even if you look back at 2008, when the dollar index bottomed just above 70, gold was at 1,000. And here we are almost at 100, and gold is at 3,400. So yeah, that's how I see the dollar index.